Hello, my name is Steve Bigelow with the Candlestick Forum. I'm going to try this again and see if we can get the sound working. Today, the markets in the oversold area produced some potential reversal signals. The Dow, right down here at this support level, did a Doji day. Now, that doesn't necessarily mean there's a reversal. However, the Doji gives us a platform to tell us whether there's been a change of investor sentiment. The Doji rule, which means if it opens positive, more than likely it's going to trade positive, at least coming back up to test the T line. If it opens lower, tells us our downtrend remains in progress. Same scenario over here on the NASDAQ. We did a bullish Harami in the oversold area. So if it opens positive, more than likely they're going to be bouncing it back up toward the T line. Then you can see what it does at that point. Now, this puts us in a situation where we know that as long as you're below the T line and don't see a buy signal, you can stay short. And NVAX, notice the inverted hammer followed by bullish confirmation. Now, remember, this is just my own statistical analysis over the last 30 years. If you see an inverted hammer and trades positive the next day, you've got a 95% probability or greater that it's going to start trading positive. So this makes for an excellent buy signal. And it also tells you that if you were short, you would have covered your short position. Now, that doesn't necessarily mean that you have to wait for a close above the T line. Notice in Roblex, you've started seeing buy signals. Today, a bullish engulfing signal in the oversold area. Hasn't closed above the T line, but you've got to kind of analyze and say, what are the probabilities doing? Starting to see buy signals in the oversold area. This is probably a good time to start taking profits on short positions and moving to a better trade. Now, what do we want to see when we see something or go short? We want to see that even though you're in the oversold area, there isn't any buying. Our recommendation on Expo today was based upon the bearish kicker type signal that failed to hold up here at the 50-day moving average, telling you there's still a lot of force to the downside. So the strength of a candlestick signal tells you when it's time to be buying. Here's your best friend signal, a Doji followed by a gap up and a gap up through the T line, breaking this downtrend. Our recommendation today was based upon this being a very strong signal. And the reason we call it your best friend signal is not only are the probabilities that you're going to be heading higher, but the magnitude of that move will be extremely strong. Same scenario on the downside. This should be AMGN. That when they gapped down, doing kind of a reverse message, when they started trading this lower, that told you the profit taking on the short side was over. There was still more downside. Where do you think the likely target's going to be that everybody else is watching? Probably down here at the 200-day moving average. So right now, you want to be covering short positions, but you want to be holding short positions that aren't showing reversals. And there are sectors like the oil sector that's acting pretty strong. So tomorrow, basically what we were using is the Doji rule. If it opens positive and starts trading positive, more than likely the shorts are going to be bought and they're going to bounce the market back up to this level. That'll be it. We'll see you in the chat rooms.